please, those audit procedures, you cannot afford to forget them. You see, I picked a random past question, which was like, I can't even remember, but we saw, can someone go over the analytical procedures again? Okay, let me just mention them. Number one, the first analytical procedure. These are the general ones I'm mentioning, but these general ones, they are applicable for a lot of things. You cannot afford to go into the exam without remembering these 8 or 9 procedures. Please don't even you have to know it going into the exam. You have to. Okay. So number one is inquiry. That's the first one. The second one is confirmation. You are confirming a balance. The third one is inspection of documents. And the fourth one is inspection of tangible assets. The fifth one is observation. The sixth one is recalculation. The seventh one is reperformance, reperforming a transaction or going through the transaction again. And the eighth one is analytical procedures. The ninth one, which I'll add, is review. So you can review board minutes. You can review correspondence with customers. You can review contracts. Lorraine, I hope that's clear. Anyway, so like as we were saying, in relation to warranty provisions, you can use these 9 procedures to, for example, if you pick review, you can say, oh, you can review their board minutes for discussions around warranty claims. If you pick analytical procedures, you can say, oh, we can perform analytical procedures around warranty provision for this year compared to last year, or warranty provision for this year compared to the budget. If you pick, let's see, if you pick, let's say, recalculation, right? You can say, oh, we'll recalculate the warranty provision. So your client says, oh, the warranty provision is 15 million. So let's recalculate it. What you say X% times maybe revenue to arrive at that number. So these are all strategies. Please don't go into the exam forgetting this. Okay. Anyway, let's look at C.
C, discuss 2 problems that you may face in implementing quality control procedures in a small firm of chartered accountants and recommend how these problems may be overcome. 2 marks.
So these are 2 problems you may face in implementing quality control procedures. Does anyone have any clue? What are some of the problems you face when you are trying to apply quality control procedures? Any idea?
So can you look at, because we are seeing that first of all, it's a very large organization as compared to a small accountancy firm. So you can look at the understanding of their, like they may not have the requisite skill to understand what they or how they operate. So implementing such procedures may be a problem.
Okay, so because it's a small because it's a small firm, right? It might not be structured or well systematized. So to be able to embrace, some of these control procedures. So yes, that's true. That's true.
So I think we could also look at, due to the fact that it's a small firm, there will be issues of separation of duties. We could have one person doing multiple things.
Okay,
And
that's one of the things
bring
I wanted.
Yes, please.
That's one of the things I wanted. So, that's one of the things I wanted. So it's a small firm, right? And in a small firm, all know how small firms is. For those of you who have worked in small firms, one person can do everything. So we don't have proper segregation of duties. And so that has quality implications on its own. That has quality implications on its own. And how do you recommend that these problems be overcome? I mean, once you've identified a problem, it's quite easy to, say that, okay, you do X, Y, Z to overcome it. Let's move on to 3. I don't think. Question 3.
Question 3. GB Eco Limited, it's bracket GB Cal, operates a chain of food wholesalers across the country, and its year end is 31st December 2018. The company is financed solely from equity, including internally generated fund from the company since incorporation. The final audit is nearly complete, and it is proposed that the financial statement and audit report will be signed on 31st January 2019. Revenue for the year is 100 million Ghana cedis, and profit before taxation is 50 million Ghana cedis. Total assets amounts to 500 million Ghana cedis. The following events have occurred subsequently to the year end. Warehouse. GB Cal has 3 warehouses. Following a torrential rain on 25th January 2019, the warehouse located in Adenta got flooded. All the inventory was damaged and has been written off. The insurance company has already been contacted. No amendment or disclosure has been made in the financial statement. Lawsuit.
Okay, so here, so even before I go into this question, right? When you ask questions around, for the previous question, when you ask questions around quality control, right? one of the ways you can answer quality control questions easily is to look at it from you do not always have to do it this way. Usually quality control questions, usually can use your mind to come up with something. But sometimes if you want some structure to your question, to your answers, you can look at quality control procedures in relation to the phases of the audit. In relation to the phases of the audit. So, what are the phases of the audit? You start with, you can say client acceptance. You can talk about the actual performance of the audit. So the actual performance of the audit, it embraces things like the engagement team. That's where we look at the engagement team. We look at things around supervision. We look at things around review of work and all that. So you can look at it in terms of the phase of the audit and look at the quality control procedures that must be in place. So for example, if you take something like supervision, which takes place in the actual performance of the audit. What are some of for example, a quality control procedure there is that there should be continuous supervision. You know, the engagement team should be structured in such a way that it has all hierarchies or all, it has senior roles in the team to be able to supervise people who are of a lower level. So that's a quality control that you put in place. And if any issues arise, these people who have a higher or more advanced role in the team can take it up and work on it immediately. So you can also look at quality control in relation to the phases of the audit. Okay. Let's move on. I hope that's clear. If it's clear, just let me know. Yes. I just needed to add that.
Yes, please.
Okay.
Yes, please.
Let's move on to lawsuit. The time, I don't know why the time is going fast like that, but anyway.
Lawsuit. A key supplier of GBCAL is suing them for breach of contract. The lawsuit was filed prior to the year end, and the sum claimed by them is 2 million Ghana cedis. This has been disclosed as a contingent liability in the notes of the financial statement. However, a correspondence has just arrived from the supplier indicating that they are willing to settle the case for a payment by GBCAL of 0.9 million Ghana cedis. It is likely that the company will agree to this. Receivables. A customer of GBCAL has been experiencing cash flow problem and owed the company 80,000 Ghana cedis or 0.08 million Ghana cedis. The company has just become aware of, that this customer is experiencing significant going concern difficulties. GBCAL believes that the company has been trading for many years. They will receive some, if not full payment from the customer. Hence, they have not adjusted the receivable balance. Required. A, for each of the three events, I discuss whether the financial statement requirement. Discuss whether the financial statements require amendment. Sorry.
Okay.
B.
Okay, you go ahead. Go ahead.
II. Describe audit procedures that should be performed in order to form a conclusion on the amendment. And 3. Explain the impact on the audit report should this issue remain unsolved.
Okay. Very, very interesting question. I'll give you the benefit of the doubt because we haven't done anything around A. So this is more about like a subsequent event question. So we are trying to find out whether the financial, depending on the timing of the event, we are trying to find out whether, even though this is an accounting, or this probably was in reporting or somewhere, it's good for us to go through again. So depending on the timing of the event, we are able to determine whether the financial statements will require adjustments or not. So it says for each of the three events, what are the three events? Number one is warehouse. When it comes to the warehouse, GB Cow had 3 warehouses, and there was a torrential rain on 25th January 2019. The warehouse located in Adenta, it got flooded. All the inventory was damaged and has been written off. You know, for this one, do you think that the financial statement should be adjusted?
So I don't think so, given that the insurance company has been contacted and there is since it has been insured, there is a high probability that it can be restored to its former condition prior to the torrential rain.
Okay, so first off, when you see a question like this, so we haven't done anything like this, so I wouldn't fault anyone. When you see a question like this, first of all, you need to know the timing of the event. So the warehouse in Adenta has been subject to flood in late January. Now, what is the year end of the company, GB Cow? It is 31st December 2018. 31st December 2018. So this event occurred after year end. You know, it occurred after year end, and the flood couldn't have been in existence as at 31st December 2018. So it occurred after year end. And so this event is what we call in reporting or in accounting a non-adjusting event. A non-adjusting event. So the financial statement should not be adjusted. I hope that's clear.
Yes, sir.
Yes,
yes, sir.
Yes, sir.
Okay. In summary, that's it. Then if you move on to the lawsuit, in the lawsuit, again, if you get this wrong, it's fine. But I just want to see what you think about it. Do you think the financial statement should be adjusted or not?
Well,
Yes, they should.
I think this is an adjusting event because there is evidence of its existence at the end of the reporting period.
Okay, so that's true. This one, the financial statement should be adjusted. You know, because you need to find out if there's evidence that the company had, you know, that obligation, you know, and the company did. There was evidence for that. So it's an adjusting event. It's very, very simple, quite simple. Then the receivables. Let's look at the receivables. Please, if you are following, please say yes in the chat, okay, so that I know what is happening.
I have a question.
Okay.
The lawsuit paragraph.
Okay.
There seem to be another information over there.
Okay.
It says, however, a correspondence has just arrived from the supplier indicating that they are willing to settle the case for a payment by GB Car of 0.9 million cedis. It is likely that the company will agree to this. Does this change the adjusting, it being an adjusting event?
Okay. What do you guys think? Does it change it being an adjusting event? That's a good question.
No, it doesn't change it. to apply some small knowledge in financial reporting, that's the standard question here is IAS 10, event
Yes.
after reporting period.
Period. Yeah.
So with this, the standard says that there should be a condition in place before the year end. So yeah, the condition is that there was a lawsuit. So despite the changes in the figures, it still doesn't change the fact that it's an adjusting figure because there was a condition prior to the end of the financial year.
Yes. So yeah, I think you've said it all. So that's it doesn't change anything, but I think what it doesn't change anything. It still has to be adjusted. But something that I might need to add that the auditor might do is that the auditor will have to contact, and that will be part of the procedures, right? Would have to contact the company's lawyers to see whether the settlement is probable and whether that 900,000 Ghana cedis is the likely amount. So that's something they need to do. But as to whether it changes, the financial statement has to be adjusted. Yeah, it still has to be adjusted. I hope that's clear.
Yes, please.
Okay. Now let's move on to receivables. I don't know why anytime anyway, the time is never enough. I had 2 past questions. I wanted us to do November 2018. The time never gets enough. Anyway, go ahead. So for receivable, what do you guys think? Does it have to be adjusted or not? This one is a bit some way. So
Yeah.
what do you think? Should it be adjusted or not?
Well, yes, we could have some adjustment. So he said it's a client of many years. So we could say that the 0.08 million on the face of the financial is an amount that has been existing for long. So that condition is still there that the client was owing them even before the year end. But they having the knowledge of going concern issues.
Yes. Okay.
It's a point that we have to take into consideration for the adjusting, because there will be a need to adjust the 0.08 on the face of the financial.
Okay, but what about I'm not saying you're wrong, but what about recoverability? Is it highly likely that this is it how much? 80,000? Oh yeah, 80,000 is recoverable since they are going through some cash flow difficulties.
Well, I could say the amount is not that huge, 80,000. So I think they could recover. As they said, they could recover some, if not all.
Okay.
Yes, please.
Okay. Any alternate view?
So my question is, I'm really a little bit, the issue about the going concern.
Yeah.
Did the organization get that issue prior to the reporting date or after the reporting, the date of reporting? Because if it's before that, they knew that, oh, they have an issue with the going concern, then you can do the adjustment. However, if you got to know about, the going concern issue after the date of reporting, then I think it will not be really an adjusting issue.
Okay, so first of all, going concern, was it identified after the year end or before year end?
Yes, sir. If I may come in here.
Okay.
Yes, so I was also facing that similar challenge. If you look at the second line where it says the company has just become aware that this company is experiencing significant going concern difficulties, it's subjective as to whether they are aware prior to the year end or just after the year after the financial year end. That's becomes very difficult to determine whether if it's even during the audit that this came up. But just saying has just become aware, you just can't tell the timing. It becomes very difficult to tell. Yes.
Yeah, it seems it's more likely that they has just become aware. Sounds like it was after the 31st December 2018. That's how it seems like, that the company has just become aware that that this customer is experiencing significant going concern difficulties. But it's quite subjective though. But that's how it sounds like to me, at least. That's how it sounds to me. Like, I don't know if someone thinks differently about it. Maybe my English is not good, so. Okay. So who thinks that the going concern seems to have, but that's not the only issue. I don't know why we are restricting ourselves, but who thinks that if you think that the going concern issue, they got to be aware of it after the reporting period, say 1. If you don't think so, say 2 in the chat. I just want to see something.
So please, can you come again with the 2 scenarios?
I said, if you think that the company became aware of the going concern issues after the reporting period, type 1. If you feel like they became aware before the reporting period, say 2. Okay, we have some interesting results here. Okay, everyone thinks it. That's how it sounds to me. But yes, we have talked about going concern, but we need to look at recoverability, right? That's one of the things they point out. So GBCAL believe that as the company has been, because it's receivables you are talking here, trading for many years, they'll receive some, if not all, So there is some belief based on the trading relationship that they have that they'll be able to recover some. Now, under IAS 10, right? Under IAS 10, this is all about timing. Under IAS 10, when a client or some customer, is going through some tough times in terms of cash, like having cash difficulties, cash problems. Okay, please, the poll has ended. It's okay. Lorraine, please. Lorraine let me finish Lorraine doesn't talk. She doesn't want to talk, but she's typing. She's asking a question, which I'll deal with later. So under IAS 10, right, if your customer or a client is going through some huge difficulties or going through some tough times, relating to cash, if they are going through some difficulties, if your customer is going through or experiencing some huge difficulties, a few months after the year end, right? a few months after the year, and just like this scenario in terms of when they became aware, then what it means is that based on a normal day, it is highly unlikely that they'll be able to recover this, but from the case, we are told that, from the trading relationship, they might be able to recover something. From the trading relationship, they might be able to recover something. So the big question here is that, do we have to adjust the statement or not? So if you think we should adjust the statement, 1, you don't think so, 2. I just want to see what my students think. If you think this one deserves adjustment, say 1. It doesn't deserve, say 2. Very, very simple. Well, I need more answers, so please. I need more answers. If you think it should be adjusted, 1, you don't think it should be adjusted, 2. How many answers do I, anyway? I don't think anyone. Okay, so let me just answer it. So this question is a bit, I must admit that it's a bit dicey, right? It's a bit dicey. What you need to know is that under IAS 10, which is events after reporting period, if your customer is experiencing some cash flow difficulties, just a few months after year end, then what it means is that it's very, 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 very unlikely that this 80,000 was recoverable as at the year end. As at the year end, it's very, very unlikely that this 80,000 was recoverable or was going to be recovered. I don't know if it makes sense.
Yes, sir.
I think it does.
Yeah. So it's at that time, it's very, very unlikely that they are going to be able to recover it anyways. So that's the logic, that's the logic you go with. I know it's quite tricky. It's quite tricky because if the customer is experiencing cash flow difficulties right after, because that's when you claim you became aware of it, right after the year end, then it is highly unlikely that you are going to recover that 80,000. As at the year end, it's highly unlikely. Okay. That was some accounting in school. But then it says describe audit procedures. Please, it might go off in 4 minutes. So when it goes off, please join and let's go through a few things before we depart. Describe audit procedures that should be performed. Describe the audit procedures that should be performed. So let's take it one by one. What are some of the audit procedures like we talked about, right? the 9 audit procedures I gave you, they will usually apply to all of this. So for example, sorry I have to rush through this, but for example, if you pick, let's say, which one was the first one again? If you pick, let's say
warehouse.
Let's say receivable. If you pick receivable, one of the audit procedures you could use is confirmation of the receivable balance. You can inquire with management. You can review the post, the year-end receivable balance to check if any payments have been received from the customer. Basically, those 9 audit procedures I gave you, it's very, very important. Very, very important. Let's move on to III. Explain the impact on the audit reports should the issues remain unresolved. If the issues remain unresolved, what will be the impact on the audit report? What will be the impact on the audit report? I think that's what's asking here.
Okay, so first we have to know whether it's an adjusting or unadjusting event.
Yeah.
If it's not, then it being unresolved will not really be an issue. However, if it's an adjusting event, you have to also look at the materiality of the figure we are looking at. If it's material, then I think here.
That's it. So you look at it in terms of the materiality and the impact it will have on the financial statement. I wish I could take my time to go through this. So B, describe your responsibility for subsequent events. Describe your responsibility for subsequent events. Sorry, I have to rush through this one. Describe your responsibility for subsequent events, assuming the event occurred before your report is signed. So your report is signed, it means the auditor's report is signed. So we are looking at your responsibility as an auditor from your year-end date to the audit report date, when the audit report is signed. So what are some of your responsibilities? That's all it's asking here. So some of your responsibilities are to design the audit procedures, to perform the audit procedures, to obtain sufficient and appropriate evidence, of all events up to the date of the auditor's report that may require some adjustments or some disclosure. You need to find out, because after the year end, there are some events that might happen that may require adjustments. Some too might not require adjustments. So those